Global Solutions, and I have the pleasure today of having Miss Marenda Anderson on. She's a longtime friend of mine, and she's actually literally helped me through this mortgage process, learning it as I started in the business and cultivating customers and clients and tossing them over to her to help me get them approved. So it is a pleasure. I'm going to let Miss Marenda introduce herself and tell a little bit about herself. And then we'll get into some Q&A, some questions I have, and some great tips and details that Marenda has for us that we're going to love for years to come. I promise you, it will be stuff you will enjoy. So, Marenda, I'll turn it over to you for a few minutes so you can introduce yourself to everybody.
Well, hello, everybody. I am Marenda Anderson. I'm with Primary Residential Mortgage. I've been in this business, gosh, I need to go and count back, at least 20 years. I've been with this particular company right at 15 years. So, I mean, we've been doing this for a minute. Yeah. I'm telling you, as time goes on, though, I learn so much. And because the industry changes on a regular basis, we're always trying to keep up, trying to keep pace. So though I've been in the business a long time, there's always new stuff coming out. So I try to stay up with what's happening. But the basics remains, what lenders look for, all of that stuff pretty much stays close to the same.
Yeah.
But I enjoy it.
Yeah, you do. And it shows. It definitely shows that you enjoy it. It's part of who you are.
Yeah, but you know what? I'm having to try to stop being so emotionally involved. I find that I get emotionally involved with my customers sometimes. And it makes it hard when you do have problems. But
yeah, I don't think we can stop doing that, though.
You don't think so?
No. I still find myself looking for moving trucks and looking for boxes and trying to help somebody move out at 1 o'clock in the morning. I'm over their house packing up stuff. Like, you're not supposed to be over here doing this. What are you doing? So I don't think we can help ourselves. I think it's part of the process. Like, no, go to your HR, get this. No.
Yeah.
I think it's
somewhere. Meet me at the McDonald's, stuff like that.
Yeah, I'll come over tonight. You want me to take it to your mom's job or your dad's job? Who? Mm-hmm. Yeah, I think it's part of who we are, and we want to make sure. For one, we want to make sure we get the deal done, and for two, we want to make sure our clients are serviced well. Mm-hmm. And it definitely shows. I know the experience that I've had with my numerous clients that you've helped. It makes it so much easier to have a knowledgeable lender there who knows the process, who knows the loans in and out when it comes to what we need, what documentation we need, how we're supposed to, process this document, getting their paperwork together. I mean, it's a lot of small little things that add up to it that make it a successful transaction. So that's why when I wrote my book, I was like, I'm going to call it The Guide to a Successful, Smooth Transaction, because there is a process to that. I mean, you go through a headache and have tons of people that will make your transaction terrible. You're like, oh my God, I want this. But I have never, not once, in, 20, 30 people that you closed with me. I mean, you've done family members for me. We refinance. Families, got people out of loans, help people get out of bad situations where they were paying too much money. You close transactions that other lenders couldn't do. So I call you up, can you try and get this one closed? So, I mean, there's tons of things that, go on in the background that we want to make sure people are able to do their transactions smoothly. And doing that, you have to be prepared. You have to kind of know the process, know what it is that you need to do. So I wanted you to talk about that a little bit, about what the process is from your standpoint. I know as a realtor, our standpoint is just a little different for us preparing our clients. We usually prepare them to come and talk to you before we even take them out. We're like, let's see Marenda first. And we need to make sure that you are prepared for this mortgage before I start driving you all around the city and getting you there.
Well, I have to say, one of the things that makes my job easier is having a good realtor. Having the realtor that's going to work as a team rather than, I've had realtors that almost work as if the loan officer was the enemy. You know, they're looking for mistakes or looking for errors or looking for problems. And to work with somebody who, you know, we got the same goal in mind, we have the same heart, we work together, that means a whole lot. As far as a lender, when a person comes to me, the very first thing I do is I ask for the basics. I want to see your identification, ID and your social. I want to go ahead and get a copy of your tax returns and your W-2s. I want to know what your bank statements look like. One of the biggest things, of course, is income. So I've got to see your paycheck. You know, we need a month's worth of those. When people come to me with those basic things, we can get them pre-approved and know we've got a good deal even before you start driving them around. Now, technically, what happens a lot of times is lenders will do a phone consultation and go off of what the people say, because we're just assuming that you're going to give us good and correct information. And a lot of times pre-approvals are done that way, but you truly don't have a good pre-approval until we know what you actually make, dollars and cents, what's taken out. There are things that come out of a payroll check, most importantly, like child support, that is a debt. So we have to know all of those types of things. But when we're pre-qualifying, if I can find out what they make, find out what debts they actually have by pulling their credit report. Of course, we all know that one of the biggest things that a lender is going to look at is your credit. We're going to see what you pay, how well you pay, what your credit history is like. One of the things that I have my own definition that I coined, and if you look in Wikipedia and you see it there, you're going to say, Miranda said that. A credit report is nothing but a history of how you pay. So if it's a history of how you pay, to say, okay, then I've got some charge-offs and collections, I want to go pay them all. Will my credit score go up immediately? The truth is, it's a history of how you pay. If it took you 5 years to pay it, that's your history. So, you know, we're going to be looking at your credit history. We're going to be looking at the debts that you actually have right now. Your debt to income ratio. You tell me if I'm going too fast, too far, because I don't want to miss questions that you may be planning on asking later. But the debt to income ratio is the biggest thing. We've got to know how much debt you got versus how much money you've got coming in. We want to know what you're going to have left over once you pay your bills. These are things that we're looking at that's very, very important. Employment. Where are you employed? How long have you been employed? A rule of thumb is 2 years. A lot of times it's been said 2 years on the same job. Well, that things have become a little bit more relaxed. Even if you hadn't been on the job for 2 years, we want to make sure you've had employment for the last 2 years. I like to say in the same line of work, but that's not always the case. If you've gotten a job and now you've got a better job, oh, you're a much better candidate than somebody who stayed on the same job. So the fact that you've done something to better your situation puts you in a much, much better chance of purchasing a home. So employment is major, major, major. Knowing that you're going to be on that job for a while is something that we're going to verify, and we're going to see that they plan on keeping you. You don't want necessarily to be at a temp service. You're going to have a little bit of problem there. Now, when I say temp service, I'm not talking about the contract companies. There are some companies like MAU in this area and some other companies that are contract companies, but you're working for them and you're working on a full-time job for that particular contract company. That's different from a Kelly service where you go in here one day and go on someplace else another day. So you want to know the difference so that you'll be prepared to know what we're going to be looking for as far as employment is concerned. I'm gonna put a pin right there and let you pull me wherever direction you want me to go.
Okay. I had a couple that came up there. Okay, the big difference between pre-approval and pre-qualification, because we get that a lot. So a lot of people I called my mortgage lender and they pre-qualified me. So I'm ready to go out and start looking for a home. In this particular market, and now a lot of sellers don't even want you in their homes on a pre-qualification.
Right.
So in a lender standpoint, what is the biggest and the best way for us as consumers to combat the pre-qualification versus the pre-approval if they don't use you? I know if we go through you, we try and get our people to do everything.
Right.
Well, we do it.
That's a very, very good point. When I was talking a minute ago and I mentioned the fact that very often you have people that just call in. So you're just talking to them on the phone and the information you get is basically just what they told you. You've not verified anything.
Right.
So at that point, technically, though we call it a pre-approval, technically it's a pre-qualification. You're just getting pre-qualified. Because we cannot approve that. I don't know for sure. I don't know that you really work where you say you work, let alone make the money that you say you make. So in order to combat that, my suggestion would be to realtor to make sure that when those people approach a loan officer, go ahead and have those documents. Get those documents sent in via email or fax or however they want to get them in. But go ahead and get those documents, because then you can truly be pre-approved based upon that side. Now, again, the house still has the appraisal and all that kind of stuff, but you can get a fairly genuine pre-approval having had those documents turn in, because we will have had time to verify them. You're not going to easily get a pre-approval in a 24-hour period. You're going to get a pre-qualification in a 24-hour period.
Right. Yeah. That's always a huge one with a lot of clients. I know from the realtor side, they were like, I've been pre-qualified for $250,000. So I'm going to have to contact the lender and get pre-approved. And they're like, I've already done that. No, you got pre-qualified. So you told them over the phone how much you made, where you worked on that. So they haven't pulled your credit report. They haven't done any of that 9 times out of 10. Most places don't. So you want to get pre-approved. So you want to go ahead and submit your documents, get everything over to the lenders, let them know. I never ever take them. I've always had them go to the lender's office to get everything, everything submitted on there, their pay stubs, tax returns. Let them know you have to have filed your tax returns, because that's a huge thing.
Absolutely.
But your tax returns have to be filed. So I always do that. When it comes to credit, what do you see, or what are you seeing in the industry with your clients on a general basis that are holding people back from their mortgages, from their credits? That's my number one question, right?
Well, credit is always the number one issue when you talk finances. But one of the biggest things that I see that's kind of being an issue here, and I was reading something about it even earlier today, and that is student loans. Student loans can work for you or they can work against you. They can work for you if they're either in deferment or they're being paid on time. It's a great installment loan, an installment credit line. So it can work for you, but if, say, for instance, those things came out of deferment, you didn't know they were out of deferment, or that comes up a lot that they did not know, and you're not paying them, then now it's gonna come back to bite you. It really can hurt you if you don't get started paying or make some kind of arrangements or consolidate those student loans. Whatever you need to do, they make those student loans report favorable. But I do find that a lot of times that's a major issue, because people have gone to school, done well, and they owe $50, $60, $120,000. And if we have to have it, even if it's paid on time, now conventional loans, FHA loans, and USDA loans require you to count 1% as a payment. And that can be that's a lot of money. It would behoove you to go ahead and get some kind of agreement with them where, you know, how they put you on a lower payment plan, that kind of thing. Then if that be the case, if you all have an agreement of $50 on a $50,000 loan, then guess what? We will use $50. So student loans is one of the things I want to say. Make sure you keep up with what's happening on the student loans. If they come to where now they're out of deferment, you need to either start making payments or contact the people and get them consolidated or lowered or whatever. Another thing that show up that becomes a problem with credit is judgments, collections, and charge-offs. Collections and charge-offs are a major issue. Medical. A lot of times, for some reason, people have thought that medical debts don't count. Mm-hmm. Well, they count. Now, in scoring, I understand it don't hit you as hard from what I understand, but those things can be taken care of easily. If you got medical debts, I strongly suggest you contact the institution, especially if it's a hospital, and see if they have a sponsorship program. I know that here, what's the new name for the hospital? The name and changed so many times. I don't even. Prisma. Yeah. They have had
hospital systems.
Yeah, right. But they've had sponsorship programs that people don't know about. And all you do is go ask about them and say, listen, I know I owe you $10,000, but I'm not going to be able to do it. And they will work with you. There have been times when people have been totally just been dismissed. There are things they've gone ahead and just totally wiped it off.
Right.
And then there are times when they'll put you on a very low payment plan. So those are things that I run up against a lot when it comes down to credit. Also being overextended on their credit cards. Mm-hmm. Okay. You may pay on time, but if your limit is $2,000 and you owe $19.99 on it, then it's going to make your credit score drop. Right. And the only thing you got to do is pay it down, and you will see in a 30-day period, it'll run back up there. So those are things you want to keep an eye on with your credit.
Yeah, a credit card has always been a huge one for I know my clients is always credit cards. They're like, oh, I got 6 credit cards and they're about maxed out. I just pay them off each month. I was like, okay, pay them off and don't charge them up again. I need them all the way down. I can tell you now. You're gonna need those all the way down, and it needs to show on report when they go and pull that. It's like, so I can't qualify. You might be able to qualify. We can still do it, but I can tell you that that's probably going to be one of the issues. And usually 9 times out of 10, it's you know that they got get them down. Some people just live on their cards and pay them off each month, which is fine, but it reports on your credit report. So if that's something that you do, just be confident that is going to report on your credit report each month, that's what you do. So again, we're looking at the history of your credit report. So it's going to show that each month they use these credit cards, max them out, pay them down, max them out, pay them down. You know, again, some people do use theirs. I wanted you to describe, since we're doing it the basics, what's the debt to income ratio and what does that actually mean?
What it should look like. Or what it means or what should it look like?
Both, what it means and what it should look like.
The debt to income is basically how much debt you have versus how much income you have. If you want to know how to calculate it, you're going to take your debt and divide it by your income. And you'll know exactly what we call DTI. When you hear that, that's what we're saying. But you'll know exactly what it is. And most of the loan programs want to see you anywhere from 41 to 50. 50 is now gotten where it stretches it a little bit. But if you have good income and your credit is good, we can get you up to 50, sometimes even a tad higher, especially if you have good reserves. So that's what we're going to be looking for your debt to income. But you've got to make sure that when you're calculating income, you're calculating true income. Let me just quickly say, being paid under the table does not count. We cannot use it. However, things that you may not think about, like child support, we can use. I've heard people say, well, I'm on Social Security, so I can't apply. Sure, that's income. That's more dependable than a lot of other things.
Right.
Today. We don't know what's going to happen tomorrow.
Right.
Yeah, you're going to calculate that in your debt to income. And basically, once you get that number, that'll kind of tell you where you're going to fall as far as being approved.
Yeah. I always find it exciting when the senior citizens, they're like, oh, I want to buy a house, but I can't afford to buy a house. I'm like, you get $2,000 a month, Social Security. I'm like, you can buy you a house. I mean, it's not going to be the big, 5-bedroom, 3-bath. Usually 9 out of 10 is just them by themselves. But just knowing that there are people, they're able to purchase homes gives them a lot of security, and it gives them a boost as a person that they're something that they can call their own. So I always love when senior citizens find out that Social Security does count as income.
Yeah, and the thing is, in today's market, to rent puts them more at risk. I mean, my goodness, you're talking about $2,000. But now you can't rent anything of any substance for 80% of that, for $1,000. When you can get something for $700, maybe $800 a month, and it be buying it as opposed to rent, which is going to go up again next month.
Yep. Yeah.
And for our seniors, No, I was going to say for our seniors, their income, the little raise that they get every year, doesn't go up nearly as fast as the rent's going up.
Right. Oh yeah. Yeah. The rental market is astronomically crazy right now.
It's through the roof. It really is.
Ridiculously crazy. I've worked with some investors, as you know, and they're all like, yeah, we are gonna rent out for a while. We're gonna hold on to these properties and rent for a while this rental market is killing it.
And you can't be mad at them for doing it. So
no, I don't. I definitely, I don't get mad at them. That's how I get paid. So I'm all for it. But some places that we've had on the market $850, we send notices to tenants to say, hey, the rent's going up to $1,000. Yeah, $200 more.
Yeah, it's not everywhere. Yes, absolutely. Yeah. So
it moves. And I like to tell people, and I want to make sure we get this out there. If you think your credit is bad, and that's always, and we've always gotten this, my credit is terrible, I can't qualify. I'll send them to you in a heartbeat. I'm like, nope, you need to call Marenda, let her take a look and see where you're at. You'll be so surprised. Just because you thought, that card was charged off, or you knew you had medical bills and didn't pay them. There's so many things. And the credit, I'm not going to say the credit repair system is so convoluted, because it's really not. It's simple. It's a book of laws. And if you go through and decipher the laws, it is easy, in my opinion. It is easy to tackle that road. But it's always best, guys, to have somebody look at your credit report. Don't just say because you did something that you can't qualify. Because I know a lot of my clients, and you can attest, you close their loans. They were initially like, no. The lady we had from New York, remember, she came and she was like, I'm not going to be able to buy no house. I was like, okay, we're going to have you call Marenda. Let's have Marenda look at. She got her a $240,000 house.
Absolutely. Like, we saw her intern around and sold her son.
Yeah, her son. She just never ever thought. But I always tell people, don't negate the opportunity. Owning home builds wealth 10 times over. Continue to get properties. Store them. You don't have to tell people your business. Store them. Keep what you got, and keep building wealth to build your legacy. So, did you have any last minute? We were making this the basics. Oh, I know which one I'm going to talk about. The types of loans, types of mortgages.
Yes, that's good. Really
touch on those before we go.
You've got your conventional loans, which is that you've all heard of Fannie Mae and Freddie Mac. Those are pretty much those are your I guess your basic loans. They have mortgage insurance unless you're 20% invested. If you put 20% down, then you won't have mortgage insurance.
Right.
You've heard of PMI and MI, that would be PMI, that's private mortgage insurance. Then you've got FHA loans. Those loans you're going to put down 3.5%. That's very often used as a first-time home buyer loan. That's one that is like one of the most popular. It does have mortgage insurance, both upfront and monthly mortgage insurance. Okay. And you've got the USDA loan, which is one of my really favorites. It's a rural housing loan. It's a no money down. Don't get that confused with no money at all. No money down. You don't have to have a down payment. However, you will have to have closing costs. Either you pay it or you have a wonderful real estate agent who knows how to negotiate with the seller, or the seller pays it. And if the seller pays it, it's not uncommon for me to even have people get money back during those types of closings. We do VA loans. VA is another 100% program. And we've got some of the other ones that are just not quite as popular, but we do all of them. We have a 203K. That's a home rehabilitation loan, meaning you get a house and it needs work, as long as it's over $5,000 worth of work, you can do a 203K loan. So we've got some very good products, and I always enjoy helping people with just kind of fumble through what would be the best program for them.
So that brings me to another point. That's another good reason why to talk with your lender first. Because you can find out before we go and look out and you see this beautiful home that you wanted in the middle of downtown Greenville or the middle of downtown Atlanta. You can talk to your lender, and your lender's gonna be like, you know what? Buying that home in the middle of downtown Greenville is gonna require you to put 20% down. Or it's gonna require you to move to the outskirts, which is only 15 minutes from the heart of Greenville or the heart of Atlanta, and you put no money down. You have a USDA loan, which qualifies you. I'm speaking, I should have made a ticker for USDA loans because I love USDA loans. I will find the same house in the middle of the city, the same builder. And so 20 minutes down the road and save you $130,000 on that same floor plan. I love going, and not to toot my own horn, but toot. I always get those sellers to pay those fees for my clients. And that's because we have talked to Marenda before.
Absolutely.
We know ahead that this is the kind of loan that we're going to be looking for. So when we're looking for that, we can start the conversation with that other agent or representing the seller. We can start that conversation correctly. So that when it comes time to write that contract out, we've already pretty much solidified that seller is going to be paying that closing cost for our client. Well, I'll say for my client, because I've been fortunate that 9 times out of 10, maybe 10 out of 10, they pay it. So it's a big boost. It is a big boost, and it gives us as the realtor that negotiating power. And so you're always going to be on the same team, but your realtor, your lender, and yourself should all be on the same team, working together to get you the best benefit financially for this purchase. But it should be fun as well. And I think I have tons of fun with my clients. Buying houses, looking at homes. This is what we do for a living, and we don't want to make it boring either. So I think that kind of covers it for the basics part of it. I know tons that goes into it, and I've committed to making these 30 minutes. So we're right at our 30 minutes. Did you have any tidbits? Girl, I told you we could talk about this all day long. But before you,
I'm going to quickly say this. And that is, don't just wake up one day and decide I'm going to buy a house. Start preparing. Start saving. Get to know what your credit is like. Go ahead and have that conversation with your realtor before you just wake up and say, I'm tired of renting. I want to buy, but you're not ready. So prepare.
And if you don't do that, you can always click on Marenda's link to get pre-approved. You don't have to talk to her. You can go to her website. You can click it. She'll get it on there. And once she get it, she's going to call you. Okay, so make sure you put in the link. Marenda Anderson, she's going to be the lender that you want to choose when you go to the link on there. You said there's some place on there they can click. Yeah. So you can go there, primaryresidentialmortgage.com/mortgage-goals/get-started. And that will get you over to Ms. Marenda. We have thoroughly enjoyed it. I know I pulled you out of your comfort zone. This was cool. It was cool, and it's going to be out there. I'll make sure that we get you a copy of it. If there's anything that we can do, guys, to help you all, again, don't hesitate to reach out to us. My name is Kimberly Evans. I'm the broker in charge of KV Global Solution. And we have Ms. Marenda Anderson of Primary Residential Mortgages. You all have a good day. See you later, Marenda. Thanks.
Bye-bye. Thank you.
Bye.
Bye.